Hey everyone, welcome back to the channel, your number one source for income-oriented investing. It's time for the picks of the month / income overview for May. This is the US listed episode. So of course we're going to cover funds that are listed on the US stock market now. So let's check out what the market has done in the last month for April. I'm filming this on May 2nd here. So last month, April wasn't that great for both the NASDAQ 100 minus 4.43% and the S&P 500, which is a better representation, more diversified, minus 3.6%. So it's probably because inflation seems to be sticking around, right? So not that great, presenting us with some nice buying opportunity. However, when there's fear, there's always buying opportunity. So let's take a look at the income landscape on the US stock market. But first, I'd like to thank the sponsor of the video, good friend of the channel now, Covered ETFs. Covered ETFs has a fantastic single stock. If you like investing in single stocks, or you like any one of these big tech companies, but you're an income investor and want monthly income, consider Covered ETFs offerings here. They have 6 of them so far. They all have very, very nice high yields, especially the Tesla one, which of course makes sense. The higher the volatility, the higher yields. But they also have an Apple one, Google one, Microsoft, Netflix, Amazon. So make sure to check it out if you're interested in any one of these companies. You want to invest in them, but you want income and you want a little bit less volatility than investing in the actual stock itself. So once again, thank you, Curve, for sponsoring the video. So let's continue with the rest now. We'll start with QYLD. So I added QYLD back in the mix, although there's not much to talk about here. QYLD is just a rinse and repeat set in stone approach. So the premiums, the monthly premiums for the NASDAQ seem to be a little over 2%. So if they're over 2%, you'll get that 1% distributed out. So they've been relatively consistent near the 17-cent range here, still having trouble reaching that 8 billion, or I think it was 8 billion at one point, but the NASDAQ went down. So so that's QYLD. Let's look at JEPI and JEPQ, the two biggest, most popular covered call ETFs by far on the US stock market. So the JEPI distribution was just released, a little bit less than last month, but a little bit more than the prior months of February and March, where markets were ripping and volatility was low. So still a nice, consistent, high 6, 7, 7.5% yield here with JEPI. JEPQ gaining assets like crazy here. I think it passed 11 billion, is it now? Or wow, 12 billion. Holy smoke. So it's blown past QYLD, which has always been the top dog when it comes to the NASDAQ. Not surprising at all. So of course, this is going to have a much higher, little bit higher yield because the NASDAQ is a little bit more volatile than the S&P 500. Slight increase from last month, which is pretty nice here. So moving on to more newer competition, which are, both of these are outperforming GPIX and GPIC. They're both outperforming JEPI and JEPQ. Last I checked, which was very, very recent. So I have to say, I'm very impressed with these very consistent distributions. Not only that, but slightly increasing distributions for GPIX, which is the S&P 500 one. And same thing for the NASDAQ one, GPIC, with a Q here. So very, very impressed with these ones. A little bit lower fee than the JP Morgan ones, and I believe that the biggest difference is a little bit smaller fee, which it's 29 basis points, I believe, but it's going to go back to 35 eventually. But there's that, and I think they're outperforming JEPI and JEPQ because they hold all the indexes, where JEPI and JEPQ does not hold the entire S&P 500 and NASDAQ 100. So they're doing really, really well. Make sure you guys know, especially if you own and like JEPI and JEPQ, you got to know about these ones as well. Could be great options for you. Now moving on to the NEOS ones. I know these are your favorites for many of you. Very, very high yields and consistent. A nice 12% yield with SPY-I and about 14, a little over 14 with the NASDAQ one, QQQI. So same thing here. Very, very consistent, fairly consistent distributions. I know it's a favorite of many of you for that reason. And same thing is happening with QQQI, which is newer, but it does the same thing that SPY-I does, just on the NASDAQ. And I also want to point out that they do have a nice video explaining return of capital here, in case you want to watch it, in case there's a lot of nonsense and negative connotations about return of capital. I thought that video was really good. So if you see return of capital as a negative thing and want to know more about it and why these high yield funds typically have a lot of return of capital, check out this video. It explains it really, really well. We have IVVW, which is now the lowest fee S&P 500 covered call ETF at only 25 basis points. So that's right. BlackRock is in the game now with their own very, very high yield S&P 500 ETF. They declared their second distribution, a little bit lower than the first one, but still very, very high yield, near this 15-16% mark. And this is actually, by the way, a set in stone approach. They just do 1% out of the money. So it's a fairly, I would call it a fairly aggressive covered call approach. So lots of covered calls here, lots of income, but you are giving up not the entire upside of the S&P 500 like XYLD does on Global X, but there's only 1%. It's 1% out of the money, so you can only capture 1% in that given month. That's basically what it means. They have the Russell one as well. They have no NASDAQ one as far as I know. Please correct me if I'm wrong here, but they have a Russell one, Russell 2000, and this one is actually 2% out of the money. It kind of makes sense because I guess they want to hit that 14, 15, 16% yield, and they, with the Russell, which is a lot more volatile than the S&P 500, they could write a little bit more out of the money. Next, we're moving on to QDTE and XDTE. These are relatively new daily covered call option ETFs from Brownhill, which I just released a Q&A. So if you are interested in these ETFs, you want to know more about them, I had a Q&A with the CEO. And what's unique about these ones, of course, is the weekly distributions, which you could go here. The calendar is here. So the weekly distributions will vary, of course, for both of these. And obviously the QDT is going to have slightly higher yield because it's the NASDAQ 100 instead of the S&P. So these are definitely keeping my eye on this one. I mean, they're definitely competitors to Defiance, QQQY, and JPY, right? For sure. Right now, they are both under QQQY is beating QDTE, and JEPI is also beating XDTE, but it's really too early to tell. There's not much data here. It's not even been, it's a couple of months only on these ones, not even. So QQQY, JPY have declared much bigger distributions, though. That is definitely something to let you guys know here. And it's no surprise because volatility has been higher in April, right? So higher volatility will lead to much richer premiums. So, and especially the Russell one, look at this. It's a massive distribution. I guess the biggest one yet. I guess the volatility was really high on the Russell, which is great. There is SPY-T, which is more of a targeted. They're targeting 20% yield. And stay tuned because I'm going to talk to Jay about this one. But it looks like they're pretty much doing the same thing what SPY-I does, or something very similar to that. So yeah, they declared their second distribution, I believe. So, they're targeting 20% yield. So this one might be more up your alley if you're maybe living off dividends. If you're living off dividends, something like the QQQY, JPY, definitely not ideal, not convenient, especially if you're just pulling all the dividends out. But T might be a good competitor to SPY-I. I know what you're going to ask me. Is it safe to withdraw all the dividend? Well, 20% is higher than my personal magical range of 10 to 15%, I believe. But we'll keep an eye on it. Maybe they will sustain it without much capital going down. I don't know. But either way, definitely if you're living off of it and you like Defiance, well, it's definitely a more convenient option. I'm not saying it's better. It's just more convenient or more ideal than a JEPY. So I'm excited to talk to Jay about this one. Then there's iSpy as well from ProShares, which is a bigger company, so the fee is higher. The fee is lower, not higher. This is S&P 500 here, but the distributions have been pretty lackluster here. Only a 9 or 10% yield, so I'm not sure why the distributions are so low. I mean, even SPY-I is higher, and these do daily. So I guess they're more out of the money, and they're not doing as much covered call writing, which means simply more upside. So again, we'll keep an eye on this one. I'm excited to see, like, after a year, when all of these have been out for at least a year, because a lot of these are new, we'll do the comparison and see which ones are doing better. And all right, moving on now. Those were all the index-based ones, which I feel should be, if you're an income investor, could easily be the biggest chunk of your portfolio. SVOL is my personal favorite alternatives position. I think it's a genius idea. Its performance has been really stellar, coming up on $1 billion in AUM. The fee is really low, only at 50 basis points for the fee. So it's just a phenomenal fund. The returns speak for themselves. And remember, returns here are net of all fees as well. So SVOL is just amazing. It's still at 30 cents. It hasn't changed for a little while. High, now you have High here, which is another simplified product that I like. That is, I would say, a little bit less risky than SVOL. They did change their distribution. They reduced it quite a bit from 20 cents, then 16, then 14. I'm not sure why. So now the yield's about 7%, which is still pretty good. Keep an eye on this one here. Now you have this ETF, which I think seems to be similar to High or what they do, but they keep increasing the dividend, and it is outperforming High. So I guess I'm gonna have to contact SoFi because it seems like they're doing something really good, really special here. Even the management, the MER is a little bit less than High. I think it's 2 basis points less. Yeah. But what's been really impressive is the high monthly distributions and their performance, although it's 6 months old, 5 or 6 months old. So we still got to wait and see. But this is definitely one to keep your eye on as an alternative. If you like things like SVOL or High, let's keep our eye on THTA, of course. And I'll try to get a Q&A with them as well to see, who they're hiring over there to make this really good performance on a strategy that sounds similar to High, but it is doing better. Moving on to YieldMax, of course, this is the homepage. YieldMax has added 2 new ETFs, one on Bitcoin. Of course, this is not surprising, but they also added the first inverse. So I thought the stock symbol was really funny, crash. So this is actually short. It shorts Tesla. So if Tesla goes down, it's actually good for these ETFs. So I can't wait to talk to Jay about this one. I want to know, are they going to be adding more short ones? Are they going to actually put the short one in YMAX, which is the all-in-one? So very curious about that. Very, very curious. Moving on to more the fixed income stuff, which is not my favorite. I don't want to spend too much time on this. There's a bunch of fixed income style income ETFs. You have AGGH, which is kind of like an all-in-one fixed income solution. Has all kinds of different types of bonds. And I believe it also reduces distribution to 14 cents here. So definitely got to keep an eye on this one here. So even with 14 cents, I think the yield is still fairly decent at about 8% or something like that, but these could change from month to month, right? So if we just do, let's see what the yield is right now. It's a little over 18 here. Of course, you have the TLTW, which is very specific. It's just long-term government bonds. You have LQDW, investment grade corporate bonds, and my favorite, the one that's actually beating out of the 3, doing the best by far, is HYGW, the high yield corporate bonds, or what's commonly referred to junk bonds, but it has the best performance by far out of all 3 of them as well. So that's just in case you have some fixed income options here. Let me know what you guys think. Should I still even bother mentioning these fixed income ones, or you don't care? Let me know in the comments below. Closed-end funds, really quickly here. Of course, there's CLM trading at about a 9% premium right now. I think it was, I had seen it very, under 5, which is incredible. Don't forget this one. The best way to play this, if you like CLM, is dripping it at NAV. Dripping it if you're American. If you use a U.S. broker, many of them are enrolled with the drip plan with CLM. So you actually drip at NAV, which means you're when your drip goes through, you're buying them at the NAV price. That's literally the best thing about CLM. And as a Canadian, we don't have access to that, and that's why I had gotten rid of it myself personally. And in terms of closed-end funds, all-in-one solutions, you have RIV, which doesn't have as good as a discount as it used to. You have YYY, of course, which, let's see the discount here, 4.67. And then you have this one here, CEFS, which is the best performing one by far out of the all-in-ones. These guys are doing really, really well at picking closed-end funds here. You could see the total returns speak for themselves. My hunch of why it's doing so much better than RIV and YYY is because it looks like they're actively picking things that are more equity focused instead of fixed income focused. I mean, YYY is doing the worst out of them, but it's 86% fixed income, 14% stocks. RIV also is very heavy on the fixed income, but out of the 3, YYY is doing the worst in terms of performance. RIV is actually not too bad. Just want to check here. I haven't checked in a while. So yeah, in the NAV is in the 8% since inception. The market price is at 7. That's just, it's normal. It means it's trading mostly at a discount like it has been and still is right now. But these guys are just really, it has less yield, but it has really, really nice performance. Really, really nice performance. But let's see the yield here. It's about 8.5. So yeah. So that's it for the closed-end funds, and that is it for the high yield income landscape. These are not, I'm not going to go through every single income-oriented ETF. This video would probably be 10 hours, but these are the ones I feel are the most important, especially the ones at the beginning, right? The index ones, guys. I always feel like those should be core positions. And now you have so many S&P 500 and NASDAQ options. You even have quite a few Russell ones as well, with the iShares joining the game. So now you have Defiance, iShares, and of course RYLD. So yeah, some fantastic options in terms of what's undervalued. I mean, there's not many sector-specific high-yielding covered call ETFs out there. The best one is probably FEPI. I didn't mention it here this time, but FEPI is great. It's technology-focused. I don't even see technology as a cyclical sector anymore. I guess I could add it to the list to always cover FEPI, but it's a really nice approximate 25% yield on technology stocks. But besides that, they don't have many sector-specific covered call ETFs like financials and things like that, healthcare. I know Global X does have some, but it's only 50% version, so the yield is really not high. So keep on investing. Think for the long term, especially the NASDAQ is really, took a little beating, so it might be a good pickup. But even the S&P 500, I mean, it can never be wrong to keep investing in the indexes, in my opinion. And always remember there's the alternatives, these great alternatives like SVOL, high, THTA that's been kicking ass, that have a relatively stable capital price or stock price, but you're getting that, 10 to 16% yield. So that's it, guys, for this episode. We're going to do this again next month, so take care and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, PASSIVeincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and U.S. stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades, and PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.